I've got some pretty interesting stats on Google. I thought their earnings were pretty good, to be honest. Revenue came in at just under 70 billion. It was up 13% year on year. Net income 16 billion. That was actually down 14% year on year. Free cash flow just 12.6 billion, Steve, 23% down year on year. Services revenue was up 10%, ad revenue was up 12%, search revenue up 14%, YouTube revenue up just 5%, which again is showing you weakness of the advertising. Network revenue up 9%, and cloud revenue was up 36%. Some particular highlights: the earnings call is really worth a listen. 3 analysts in a row trying to get CFO Ruth Porat to give them a guide on how Alphabet sees the economy, and Ruth just keeps batting it back with, "That's your job." So my thoughts are, the growth looks like it's slowing on the face of it, but I think these figures are lapped with some absolutely crazy quarters in comparison. Google don't give you any guidance, so it's hard to see exactly what they're thinking. They advise that the margins might look somewhat reduced, but it's an unlucky lap with some significant data center investments. Some interesting new stuff coming. 3D search in YouTube. No idea how that's going to work. A Shopify. I got mixed up then. I was going to call it Shopify. That's a good business for selling ties. But yeah, so anyway, a Shopify partnership with YouTube, helping creators more easily sell their goods. And they signed off for some pretty interesting YouTube facts, which, you know, if we were in fair weather and you wanted to apply these to what Roku's trying to do, it kind of helps explain it. But they said that YouTube remains well positioned to deliver the reach, results, and relevance that advertisers need. That YouTube's click-through rate effectiveness is actually 3.1 times better than that of TV. You would expect that, I would assume, being physically in your hand. 73% of campaigns on YouTube drove substantial lift in brand and unbranded searches, and viewers were up to 14 times more likely to search for something that they had seen on YouTube than something that they hadn't. So I thought Google's earnings were pretty good, Steve. Anything you want to advance on that?
No, not really. I mean, there's a couple of general points about Google here. I mean, when I look for these earnings, I'm not particularly fussy about the exact number versus the exact expected number, partly because I, apart from stealing other people's stuff, whether it's management or analysts or whatever, don't really have a view on exactly how much money I expect them to make in any given quarter. I'm not that fine-grained on this sort of thing. What I do expect is for the business to keep doing what it does. And the reason I own Google is because I think it's a cash machine. And just basically the kind of Google stuff is a cash machine. Alphabet, I heard someone complaining the other day that it is very much not a diversified operation. It comes all out of its kind of Google stuff. They are busy building out the kind of institutional side of things. Sure. I think there's kind of puts and takes for that, for what it's worth. Here's a feature of a good thing about being undiversified, and it maybe speaks to Amazon in a second. But if you diversify Google stuff with another kind of income stream or revenue stream, it's likely to be lower margin, likely to be lower quality. So now do you want your kind of high quality operation being diluted by lower quality stuff? Genuine question. Maybe the diversification's worth it. But I do think there's a case to be made here for thinking in the way I think about it is, actually, I'm quite happy with what is a very, very strong business, and let's not pollute that with weaker stuff. If we had other stuff, I'd be more in favour of spinning it out again, to be honest.
Yeah, and there were some interesting things coming along. The data centres, for me, they're growing at quite a rapid rate. They did a lot of talk about the tools and their investments into computer science that they're doing basically to help grow the features on Google Cloud. They also talked a little bit about Waymo, that now has a license to operate in I can't remember what jurisdiction it was in, but it does have a license to operate, which is strange because Tesla's supposed to win that race, and it's now third, and they're not officially either. But yeah, I just thought it was this is just Google, isn't it? This is just what Google do. They're the kings of marketing.
Yeah, I sort of in principle refuse to listen to any of the stuff about Waymo because I refuse to treat it as part of my kind of investment thesis, because there was a time when it was just so much of people's investment thesis about a year or so, 18 months ago, when there was the kind of, when EVs were really, really kind of in vogue and nearly all of them were going public by a SPAC and so on. But yeah, Waymo appears to be making good progress. I'm not an expert in this kind of thing. I stay well away from the auto sector generally, if I can help it. It strikes me as a market I don't massively want to be in, but it would be a nice bonus if Waymo did something good here.